Hey there, everyone. Dave Keller here with Market Misbehavior. I'm the president and chief strategist of Sierra Alpha Research, and welcome to my weekly show here on Stockcharts TV. Hope you guys are all doing well here as we get into the month of June, rapidly making progress through the second quarter of 2025 and what has been one of probably the most eventful years of my professional career in the financial industry. And that's saying a lot, having gone through some crazy years since June of 2000. What I wanted to do today is talk about a screen that I run a scan really on the Stockcharts platform called what I call the Moving Averages Proper Order Scan. What I'm basically looking for is a particular configuration of moving averages, which are a fantastic way of smoothing out price data. This particular scan is a way of focusing, instead of just all the thousands of names doing all sorts of things, focusing on very particular, constructive technical setups. And by looking for the moving averages in a particular order that demonstrates an uptrend phase, while there can be some different types of stocks that come back on that screen, I'll share with you a couple that came when I ran the scan earlier today. I think it's generally a workable list of stocks, and these are the ones that I like to put in a chart list to dig into a little further. So what I'm going to do today is talk to you a little bit about the screen. I'll show you the chart that you can use to make sense of it, and then we'll go through a series of examples. And I hope you find this a helpful way to upgrade your own use of the Stockcharts platform. Before we get to that particular sample scan, run the scan, look at the results, and talk about some of the charts that came out today. Do want to let you know, if you're looking for my daily market recap show, it's on my YouTube channel called Market Misbehavior. It's called Chart This with Dave Keller. We live stream every trading day at 5 p.m. Eastern and 2 p.m. Pacific. We live stream on YouTube, Facebook, X, and LinkedIn. YouTube's usually the best place to capture those videos, and certainly to watch the replays if you can't make it live. So I hope you can tune in. Make sure you subscribe to the channel and you can tune into the live broadcast and ask questions as we go. Also, I have a podcast called the Market Misbehavior Podcast. I've had some really fantastic guests recently. Last week, I interviewed Tom Boley, fellow Stockcharts contributor and someone who's become a good friend in the technical analysis community. Tom's awesome, and he dropped a number of just really thoughtful nuggets of investment wisdom, which is always really valuable, but also some great perspective on how to navigate these particular volatile periods in the financial markets. Also, a really cool proprietary approach looking at intraday movements versus close-to-close movements, which I'd never really dug into in a long time. Great charts with data he'd imported into the Stockcharts platform, so good opportunity to see what are called the user-defined indexes, which allows you to import your own data into the Stockcharts platform into your login, and then do some really cool charts. So I'll show you a great example of how you do that. So you can find both of those things, my market recap show and my conversation with Tom in the Market Misbehavior podcast on my YouTube channel called Market Misbehavior. Let's get to the scan. So best place to get here is from the front page or your dashboard. And if you go to Charts and Tools and go to best places, go to Sample Scan Library. To be honest with you, once you create this scan, you should save it into your own login. So I'll tell you, you can run the scan here, but as a free member. But to really leverage the power of this platform to save this scan and to be able to schedule it, you really want to be a premium member at Stockcharts. Very low cost relative to the value that you get out of the membership, I would argue. All right, on the sample scan library, and again, you should take some time and look through all of these scans. They're really, really cool. Grace and Rose did a great job sort of compiling this list, creating most of the scans. I have a couple that I threw in there, and it's really well done. As we go down this list, there's this section called Popular Bullish Scans, and we're going to look at moving averages in correct order, what I call moving averages proper order. I want to look at a series of moving averages and make sure that they're in the correct order, which tells me that stock or ETF is in an uptrend. You also see on the right side the bearish counterpart to any of the scans on the left. So we're not going to talk about this one too much, but just so you know, you could look at the opposite. And if you're more of a value-oriented investor, if you're looking more for falling knives and beaten down names and buying weakness and betting on their upside reversal, maybe looking at that moving averages in wrong order would be a good place to start, just to find things in confirmed downtrends. But I'm more of an uptrend guy, I'm more of a growth-oriented investor, so I'm going to start over here. Now you can run this scan, but I always like to edit it first just to see it. And these sample scans usually just have one line which puts all of it together. Now, just so you know how the Stockcharts scan engine works, You can look at it all in one line, or the way a lot of people do it is just put them as individual lines, which you can do, up to you. But it'll work no matter what, right? So you can just have it as one big argument. So what this is basically saying is I want to look at stocks, U.S.-based stocks, where the exchange is the New York Stock Exchange or the NASDAQ, market cap above 100 million, so that's in millions, and this is the argument, right? This line right here is what really creates this scan. So there are 4 moving averages that you're using. The 20-day exponential moving average, the 50-day simple moving average, the 100-day simple moving average, and the 200-day simple moving average. Now, I'm going to create a chart. We're going to use the chart of Robinhood Investments. You can see I have a chart with the 50 and 200 days. So I just need to add 2 more moving averages. So I'm going to go to the bottom, say exponential moving average, 20-day, perfect. Simple moving average, 100-day. If you're really anal retentive about having the moving averages in the actual proper order, you can kind of drag them around or set the colors or whatever. It's going to give you a chart like this. So basically we've got, I'm looking at a 2-year chart just to start. We've got the 50-day, the 20-day exponential moving average in blue. In this brownish color, reddish color, we have the 50-day simple moving average in pink, the 100-day simple moving average, and in green, the 200-day moving average. I'm looking up in the upper left in the little legend to confirm that. We can change our time frame, so I'm going to look at like 1 year just to kind of get things set up how I want. Then what I'm going to do is save this as a chart style. And this is why being a premium member is super beneficial right about at this moment, because creating scans, saving chart lists, saving chart styles, being a paid member allows you to do all of that stuff and really leverage it. So I'm going to say, what am I going to call this? I'm going to say MA proper order, and I'm going to save it as a chart style. Perfect. So now this is a chart style, and I can switch any of the charts that I bring up. I can make sure that I'm bringing up this particular chart. I'll scoot it over here just to make sure I have access to it. So you can see that when we run the screen, Robinhood should come up, right, if we're running it on U.S. stocks, because obviously it fits all the requirements. But the idea is the moving averages are literally in the correct order. So the 20-day EMA is above the 50-day simple moving average. The 50 days above the 100-day. The 100 days above the 200-day. So those 3 comparisons have to be a thumbs up, all of them, and then it comes up on the screen. To be clear, this is not the only way we can find charts with interesting patterns. I just have found this is one that really ends up getting you to the good stuff. Now, one more thing that I like to do when I'm creating screens, and it's just kind of a me thing, but I would encourage you to check it out. A lot of times, if you leave the scan like this, there are a lot of stocks that are listed in the U.S. with a market cap over 100 million, probably way more than you think. So I ran the scan earlier as is. It gave me over 800 stocks, which is way too many. I don't know how much time you want to devote to this. That's more than I would be willing to devote to this particular exercise. So I'm going to go down to indexes and ETFs and bring up the S&P 500. If you add it, so you choose the drop downs, it adds the argument. I would encourage you at this point to save the scan, just so you can come back to it. And we're going to say, go Sounders, because our local Seattle Sounders FC have become a favorite in the Keller household with my son, who is 9, playing club soccer. We're big into soccer in this house, or football, as he will call it. And Sounders are the local team. We go to a couple matches this season, and just went last week. It was a lot of fun. All right, so now I've just added S&P 500 members along with everything else. Let's run the scan and see what happens. So what's good about the S&P, it's a good working list. It's 500 stocks. It's actually a couple more, 505 I think at this point. But it's about 500 names you probably know or probably should know. I mean, these are pretty widely known stocks and big enough that they're liquid enough. There's enough trading activity. They've got good data, all that kind of thing. All right, we found 92 stocks that came up on the screen. What I'd like to do next, this is turning into sort of a walkthrough of how Dave sets up a scan, which was unintended, but why not? I click on industry and then sector. I've done it so many times, I almost just did it without telling you. What that does is it actually sorts in reverse order to how you click them. So now what it's going to do is sort primarily by sector. So it's alphabetical with communication services, consumer discretionary, consumer staples, and then it groups them by industry. So the entertainment stocks are together. The internet stocks within this sector are together. And it's just helpful to see all the restaurants and bars in one section as opposed to seeing McDonald's, then way later you see Darden restaurants and you're like, oh, 2 fast food restaurants came up. I find it's helpful to just group similar stocks together. But you could do all sorts of things. You could sort it by scooter ranking. You could sort it by RSI. You could do whatever you want. It's your login. So we've now done that. Now that I have the list how I want, I'm going to save it to a chart list. You want to make sure that you click number in sorted order, which means it's going to save the results that I did it as I reordered them. And now we have a chart list with the name of my scan, the date that I ran it, and they're in the order that I created, grouped by sector and then by industry. So what's helpful about this, by the way, is the more that you run scans, you can always go back. And this is actually one of the great benefits of a platform like this, is you can go back. You can see when I've run the scan about once a week or so, going back, and I can go back and see, all right, what were the stocks that came up on this scan on April 28th of 2025, the end of last month? What's happened in the month since? How many of these stocks actually continued higher? You can do all sorts of really cool stuff to just, sort of back test how did a scan I ran, 6 weeks ago, 12 weeks ago, what happened to those names? Did the names that I think were going to do well actually did do well? So making the time to review some of your previous scans that are all backdated now and saved on your login really gives you, I think, an opportunity to learn and to maybe update your or upgrade your scans over time. All right, so now that we do that, I usually go to a chart list view because I'm a chart person, and now I can start flipping through the charts. So the key, right, when going through all these items is making sure that we're looking at the right chart. So what I'm going to do then, whoops, now I did it. Go back. So here are the results of the scan. Let's run it again. Nope. Let's go here. So to get back, now I've created a chart list. I can go to chart lists. I go down to Go Sounders. You can see I've run quite a few of these. Here's my list. I'm going to bring up the first stock. One thing I noticed is this is using my default chart style, but I actually want the one that has all of these cool moving averages. This one that I created, right? This one here that I called MA proper order. So here's how we do that. We go to the first result, which was Charter Communications. We go to MA proper order. There we go. Now at the bottom, we want to say apply chart style to all. So we change to the right chart style. We say, yep, I want all of them. And say update charts. There we go. So now when I go back to view this as a chart list, now we can see all of them are using the cool new format that I created with those 4 moving averages. Now I can visually confirm that they are indeed all in the proper order and they all look pretty good. So hopefully that makes sense, right? So a couple steps there that I kind of went through. If you need to go back, I hope you can hit pause or rewind or review or whatever to go through some of those steps, because I went quickly through a couple of those. But the general idea is go to the sample scans, create the scan, edit it, add whatever else you need, run it, put them in the right order, save it to a chart list, figure out what chart you want, apply that to all, and now you're at this magic moment where you can just flip through, sit back with a beverage and flip through and review these charts. And what I have found, having run this scan a bunch of times and looking at the results, is I found that the results tend to be in a couple, particular types. And I'm just going to grab some of the names that came up on this scan today. So Netflix was one that came up. I'm going to switch to that chart style that we just set up, MA proper order. Here we go. From here on out, I'll just type the ticker in the left and we'll save it here. So 3 kind of general and maybe 4 types of charts that kind of come up when you run this particular scan, looking and moving averages in the proper order. Category 1, which we're going to start with, are charts like Netflix. These are stocks that are just in pretty consistent uptrends. Higher highs, higher lows. Moving averages are all sloping upwards. They're obviously in the correct order, but the idea here is this is a stock that's actually been in a pretty good uptrend for an extended period of time. It's not new. The moving averages have been in a proper order for a little while now, in this case about 6 weeks. So it's not new to the list today. But by running this scan, I will automatically surface charts like Netflix that are just good, strong uptrends. These are generally names that I hope I've learned about well before today, right? I don't want to just wake up one day, run the scan, and go, oh, I didn't realize Netflix was up so much. By running these scans consistently, you will immediately find when something like Netflix is emerging from a corrective period and the moving averages get re-engaged. Like, this is the day when they all get in the proper order, and that's when it'll pop up on my scan. So then I'm just maintaining and recognizing that it continues to be up on that list, right? So these are ones that hopefully I'm familiar with already. I'm either, hopefully own them, have them in a portfolio, or I have them on a watch list. I'm, looking for maybe for a particular entry point to identify. But generally, these are kind of long and strong, up and to the right. Think of them as core positions, right? Types of charts you kind of want to build a portfolio around, things that are just kind of working and consistently doing so. And again, you can see for much of the last year, the moving averages have been in the proper order. And I just want to recognize charts like this that are in good uptrends and then follow them as long as possible. So that's bucket one. Netflix is one example of many that, it's really not a new uptrend. It's a more established uptrend, but it will continue to come on the screen every time I run it because it continues to satisfy the criteria. So let's get to some of the more actionable ideas, right? Another one that came up was DoorDash. So you can see that Netflix came up after it had already sort of emerged from a base and was running higher. DoorDash is one of those really interesting charts because after pulling back off of a mid-February peak, pulling back to the 200-day moving average in green on April 7th, which was when the S&P and the NASDAQ experienced their own major lows, well below their 200-day moving averages, but same time frame. Then DoorDash has started to improve, and you can see we then made, basically a brief retest of that previous high. We pulled back and made a higher high, did not retest the 200-day, and then confirmed by breaking back above all the moving averages. At this point, the moving averages are all in the proper order, and they've remained so for the last 4 weeks or so. This is arguably a little earlier on, right? Something like Netflix is kind of up here, right? Already having been in an uptrend for a while. The second basket of stocks or types of charts that I found come up on the screen are stocks that are just breaking out or nearing a breakout point. These are the kind of stocks that I'm monitoring because I'm probably looking, to get in when we break to a new high, because that would confirm that this uptrend phase is in good shape. Maybe I bought earlier for some reason. Maybe when it first comes up on the screen and pulls back, I think of that as an interesting entry point. But at any rate, I'm probably very interested in the fact that DoorDash is very close to making a new 52-week high, most likely a new all-time high with charts kind of pulling back and now regaining that previous level. So the second sort of group of or type of charts you will find are stocks that are just sort of on the precipice of breaking out. And I found this scan is really good because it'll show things that have shown strength off of a recent low and are really building momentum to the point that it's almost crazy not to own something like that. And Robinhood is probably one of those examples of something, just starting to break out to a new all-time high. And it feels like, all right, if I'm not there yet, maybe this is when I want to make sure that I have exposure to a name that is looking so strong and moving to the upside. So DoorDash, I would say the second type of chart, the moving average has probably gotten the proper order more recently. It's not as extended as the primary uptrends like Netflix, but maybe just starting to break above a key resistance level in a way that I want to be aware of. The third bucket would be things like TJ Maxx. Now, this looks very different than the first two in that it's actually pulling back. What you'll notice here is that even though the moving averages are in the proper order, right? 20-day above 50, 50 above 100, 100 above 200, the 20-day EMA is actually sloping downwards. And that's because in the last week or two, TJ Maxx has actually pulled back a little bit. So what's happening is it's actually pulling back right to an ascending 50-day moving average. And that 50-day or 10-week moving average is a commonly used level to identify tactical pullbacks where you may be able to accumulate a position and ride the next wave higher, sort of the classic buy on the dips approach. So the third type of chart that tends to come up on the screen are pullback names that overall are still in a pretty good uptrend, but they've experienced some short-term weakness. And arguably, these are some of the more compelling charts because you have an opportunity to buy into short-term weakness. You have an opportunity to buy into a pullback instead of chasing something that's going vertical and you feel really bad about buying new highs and buying new highs. This is one that's actually had some of the pressure taken off in the last week or two, and it's actually pulled back to the 50-day moving average. Now, with any of these charts, we want to make sure we have proper money management protocols in place. So, you would want to clearly define if I'm buying a pullback to the 50-day, what sort of move would tell me, okay, that was wrong, I need to get out of the way, right? At what point would the price continue lower where you would have to unwind that position with a loss? Make sure that's clearly defined right up front. But I would say overall, tried and true approach is buying on dips, right? Buying strong uptrends and names that are pulling back. So I think the third type of chart that I like to find are names like TJX. Overall, probably just recently coming off of a new high, but pulling back a little bit, hopefully to an ascending 50-day moving average, showing some short-term weakness within a period of long-term strength. Make sure, as always, we want to make sure we have a proper stop loss in place, a way of making sure that we minimize losses if we're wrong in this situation. But the idea is we're betting on the uptrend maybe to continue. AZO, by the way, AutoZone, another one of those that came up on the screen, looked very, very similar, right? Primary uptrend, moving averages all sloping downwards. We've actually been chopping around down to the 50-day moving average for most of the last 2 months, but just in the last week, we pulled back to the 50-day and we've once again held it. So I'm assuming that this uptrend is going to continue. The moving averages remaining in this order tell me that the trend is okay, that it's not broken. And by pulling back, maybe I have an opportunity to buy into some short-term weakness and ride this price to the next upswing. Now, the fourth category that you will find are names that look totally different from that. VeriSign is not the example that I want. Oh, no, it is actually, but I just want to look at a little more data. I was going to say, I jotted that down. I'm like, that doesn't look right. Yeah. So what I wanted to do is look at VeriSign, but like back here, right? So if you look, right, something like VeriSign was in a consistent downtrend for the longest time. So here, right, back in early 2024, if we look at this particular period, this stock would have shown up on our moving averages wrong order scan, right? Because the 21 days below the 50-day, which is below the 100-day, which is below the 200-day, they're literally all flipped over. So that is a stock in a primary downtrend. You can see here we have sort of the spaghetti issue where they're all kind of chopping around each other because this is a market in transition from a distribution phase to more of a consolidation phase. But look at when the moving averages are finally in the proper order. It's right around Thanksgiving of last year when the 20-day EMA finally breaks above the 50-day. And then we once again have the 20-day above the 50-day, above the 100-day, above the 200-day. Right there is where the moving averages are in the proper order. This is the type of, the fourth type of name, which are names that have actually been in a distribution phase, maybe some ones that have been consolidating and are, you really haven't taken a shot yet because it's below the 200-day moving average. The moving averages are all over the place. It's not in a good uptrend. But then it starts popping up on the screen and you go, you know what? Actually, maybe VeriSign is starting to look pretty good. And we can see what happened after. That was right at that point. And look at how solid the uptrend has been as the moving averages have remained in the correct order from Thanksgiving of last year through the end of last week, right? So I think the fourth type of chart would be charts like VeriSign, sort of early December of 2024, which is when it first appeared on the scan for the first time in years, because the price action had finally recovered enough that the moving averages were in the proper order. So there you go. Those are that's one of my favorite scans to run. I actually, to be clear, I actually scheduled that scan. I have a version of that scan that I've tweaked a little bit more with a little Dave Keller magic, but I save it on my login and then I schedule the scan to run automatically every day, sometimes every week, depending on the scan. But this is a list that I love to go back to and review because I want to see what stocks come up on that list. And I like to find things in those four general buckets, right? Names in long-term uptrends like Netflix, names just starting to break out like DoorDash, names in uptrends but just pulling back like TJX and AutoZone, or names just starting to rotate higher after a long period of distribution like VeriSign. And I found that this scan is a great way to focus on names that fit into those different buckets, giving me a workable list of stocks that I can analyze using the Stockcharts platform and hopefully identify the next big gainers for my portfolio. What do you think about this scan? Have you ever used that particular scan? What do you think? What names come up that surprise you or that you think are particularly interesting? Don't forget to leave a comment and let me know. For Market Misbehavior, I'm Dave Keller. Thanks for joining me here on my weekly show on Stockcharts TV. Don't forget to check out my daily market recap show on my Market Misbehavior podcast. That's on my YouTube channel called Market Misbehavior with Dave Keller. That's it for today. Remember, it's always a good time to own good charts.